Hello everyone, welcome to your Algo Lab. If you're curious about what the savvy investors on Wall Street are doing, this episode is for you. Today, we're taking a deep dive into the latest filings from some of the biggest hedge funds and institutional investors. We'll break down their recent moves, highlight their biggest bets, and uncover the trends that could impact the market. So, without further delay, let's get started. A 13F filing is a quarterly report that the US Securities and Exchange Commission, SEC, requires from institutional investment managers with at least $100 million in assets under management, known officially as Form 13F. These filings provide details about the equity holdings of these institutional managers, including hedge funds, mutual funds, and pension funds. These details can be accessed through the US Securities and Exchange Commission's SEC EDGAR system, which stands for Electronic Data Gathering, Analysis and Retrieval. Here are some key points about 13F filings. Institutional managers must submit 13F filings to the SEC within 45 days after the end of each calendar quarter, resulting in 4 filings per year. 13F filings disclose only long positions in exchange-traded stocks, shares of closed-end investment companies, and ETFs. Certain convertible debt securities, equity options, and warrants listed on the official list may also be reported. These filings only cover holdings of securities traded on US exchanges. Investments in markets outside the US are not included. We should understand that 13F filings have 2 main limitations: missing information and untimely data. First, 13F filings do not include a fund's short positions or international investments. If a fund is primarily net long, the filings can be helpful, but for net short strategies, they may be misleading by only showing long positions. Additionally, international positions are not included in these filings. Second, the data is often untimely. Institutional managers have 45 days after the quarter's end to submit 13F filings, so they may reflect decisions made months earlier. This delay is especially significant for firms which frequently trade and whose filings may no longer represent their current positions. Pershing Square Capital Management is an American hedge fund management company founded and run by Bill Ackman. According to Pershing Square's website, their investment strategy is defined as primarily concentrated in 8 to 12 core holdings, mainly consisting of liquid, large-cap North American companies. Pershing Square focuses on high-quality businesses with limited downside risk and predictable cash flow, sometimes seeking to drive changes in management, operations, or governance to enhance long-term shareholder value. Risk management is achieved through selective investments, typically adding only 1 to 3 new core investments annually and using hedging strategies to reduce market risk or capitalize on profit opportunities. Now, let's look at Pershing Square's 13F filing in detail. By compiling 13F filings, we can construct Pershing Square's equity portfolio. Let's begin by examining the sector allocation. Here we present the historical sector allocation from the first quarter of 2015 to the most recent filing in the second quarter of 2024. The allocations are displayed in a histogram along with the underlying percentages. Pershing Square's sector allocation has varied over the years. Recently, the consumer discretionary sector has been the dominant holding, accounting for 54% of the current portfolio. The second largest sector is communication services at 20%, primarily represented by Alphabet. The real estate and industrial sectors are relatively equal, each comprising 11% of the portfolio. Next, let's examine the individual stock positions, starting with the top 5 holdings in Pershing Square's equity portfolio. These top 5 holdings make up 72% of the portfolio, indicating a high level of concentration. Here we'll plot the individual stock prices, adjusted for dividends, alongside their holding positions in number of shares. We'll also compare each stock's annual total performance with its corresponding industry, together with their differences for comparison. As of Q2 2024, Alphabet accounts for 20% of Pershing Square's equity portfolio. The fund secured its position at an ideal entry point, capturing the stock at its lowest level since 2020. Alphabet operates within the interactive media and services industry, alongside peers such as Meta and Tencent. While Alphabet has generally outperformed its industry peers, recent years have seen this outperformance turning negative. Despite this, the company's absolute performance remains impressive. The interactive media and services industry is notably cyclical, thriving during periods of economic strength and underperforming during downturns, as observed in 2015, 2018 and 2022. The year 2020 was an exception, as Alphabet services benefited from the effects of the COVID-19 pandemic. The second largest holding in the portfolio is Hilton Worldwide, comprising 19% of Pershing Square's equity investments. The fund began building its position in Q4 2017 and, despite some fluctuations in position size, has maintained the majority of its stake since then. Hilton Worldwide operates in the hotels, resorts and cruise lines industry alongside competitors such as Booking, Airbnb and Marriott. Overall, Hilton Worldwide has outperformed its industry peers with the exceptions of 2015 and 2023. The hotels, resorts and cruise lines industry is highly cyclical, typically performing well during periods of economic growth and underperforming during downturns, as seen in 2015, 2018, 2020 and 2022. The third largest holding in the portfolio is Chipotle, which makes up 17% of Pershing Square's equity investments. The fund initially built a substantial position in 2016, but has since reduced most of its stake. Since 2016, Chipotle has demonstrated notable outperformance compared to its industry peers. Interestingly, after Pershing Square established its significant position, the stock declined by an additional 48% before beginning its upward trend. Chipotle operates within the restaurants industry, which tends to be more defensive, outperforming during economic downturns, as seen in 2015, 2018, 2020 and 2022. Next is Restaurant Brands, which represents 16% of the portfolio. Pershing Square has maintained a long-term position in the company, adjusting the holding size through profit-taking and strategic buying during market dips. Their timing of these transactions has been effective, capturing periods when Restaurant Brands outperformed its peers. Restaurant Brands operates within the restaurants industry, alongside other major players like McDonald's, Starbucks, Meituan and Chipotle, which we discussed earlier. This industry is generally more defensive, often performing well during economic downturns, as seen in 2015, 2018, 2020 and 2022. In the fifth position is Canadian Pacific, representing 11% of the portfolio. Pershing Square initially exited its position completely in 2016, a decision that proved ineffective as Canadian Pacific outperformed its peers in the following years. However, in 2022, Pershing Square rebuilt a smaller position, effectively capturing the subsequent outperformance. Canadian Pacific operates within the rail transportation industry, alongside companies like Union Pacific, Canadian National Railway, and CSX Group. The rail transportation industry shows mixed performance during economic downturns. It had negative returns in some periods, such as in 2015 and 2022, while it outperformed in others, like in 2018 and 2020. Let's review the reduced and sold out positions. Pershing Square reduced its position in Chipotle by 23%, bringing it down to 28.8 million shares. The holding in Alphabet was also decreased by 16%, now totaling 11.5 million shares. There are no completely sold out positions. Let's examine the increased and new positions. There are no increased positions this time. New additions to the portfolio include Brookfield Corporation, which operates in the asset management and custody banks industry, and Nike within the footwear sector. On this channel, we share tested strategies for investing and trading, covering everything from technical analysis and fundamentals to economic trends and sentiment-based algorithms. If you don't want to miss out on any of our content, be sure to like, subscribe, and hit the bell icon to stay in the loop. Thanks for watching, and I'll see you in the next video.